Alright, this is our team Digby and this is our group member.
Okay, the first one is by comparing the cash balance and the quick ration with competitors that our cash in hand is 7,030 at the third place in all market players, and the quick ration with measure a company ability to meet its short-term obligation with its most liquid assets. That was 3.03, and it's a safe level. Therefore, we don't need an emergency loan in our operating. Next, please. Our sales grows 24.1% more than it in round one. Our overall market share increasing 3.68% as the market size raised 13.90%, and we look into the specific market segment. In low segment is increase in 3.11%. In high segment is increasing in 6.59%. Next, please. Refer to the market leader. David takes the greatest market share in low segment, and Chester has the first place of share in high segment. As for the overview, the profitability, efficiency, leverage, I am mainly concerning the following index as the table show right hand side. EBIT is $10.8 million and operating profit rate is 7.30%. Not profit is $5.9 million and the net profit rate is 8.9%. Leverage is 1.6. Next, please. We issue 5.5 million new stock when buy back 0.6 million and borrow 5.494 million of long-term debt. We have new investment in fixed assets with 10.60 million in order to produce the new product Doodle to earn the high segment market, and the stock price goes up with 6.75 per share, which is the second most in the market. Next, please. Referring to the 3.1, the net cash change is positive with 1,789, and the net cash flow in operating is 2,555 million from sale product, and the net cash flow in investing in fixed assets is 10,160, and the next cash flow in financing is 9,394 buying, issuing stock and borrowing. And I found the problem perhaps happen is our available cash flow for next period is not much, but is increasing in a safe way after we are safety with our investment and production line. We will plan to repay the long-term borrowing in order to decrease to financing cost. Thanks.
And next is for the production analysis. For For the days, we have a primary segment in low segment, and for total of utilized for production capacity of days is 169%. Since the percentage of days is lower than last time, so we have to produce more in Doodle. And Doodle, we have a primary segment in high segment, and for the total utilized for production capacity of Doodle is 127%, which has a high product performance that we expected to sell well. And did we expand automation or capacity for next round? Yes. And how will us finance this investment? We will finance by trying to get more cash into the company for further investment and expanding automation, since now we are short of financing and not confident in ourselves, may not do the further investing. And is there any threat of new brand to enter the market? Yes. Our market share is currently rate is 20.04%, and we have high market share, so it is sensibility to have newcomer into the market. And our contribution margin is higher than last time, and now is 34.5%, and we will continue to modify the performance of product, because if we stop it, then it might affect the variable cost and material cost and labor cost. And this is our picture of the contribution margin. And next, my friend will talk about the next part.
Okay, for the 5 to 6 segment analysis, for the how do you determine direct competitor, we define the competitor in all product segment to the positioning of all product. PFMN is 5.5. Our competitor are allowed at this level, who are E and at 5.5 and Furlist at 5.5 is equal. When I see the graph in low segment or group higher than other group, but in higher segment, both Shelter and Erie are higher than us. Next, please. Did you stock out? If so, why? We don't have stock out when I check in from the graph, and the potential is 10% is low and 20% is high. We meet the demand because all potential is higher than the other. Next, please. You can see the information from this graph. We will show the high text statistic and low text statistic, and we will have all information in this. Next. Thank you.
Okay. So next will be the strength and weakness. Next, please.
Change already, no?
Okay. In financial, our strength is a stock price. We got 7.6 out of 8, and profit and leverage is not very good. For the profit, we've got only 6.5 out of 9, and leverage is 4.4 out of 8. Next part will be internal business process. In this part, our strength is plant utilization, days of working capital, and inventory carrying cost. Our weakness is contribution margin. We got 3.9 out of 5, and stock out cost is okay for us. We got 4.1 out of 5. Next, please. For the customer, our strength in this part is product count and SG&A expense. We got 5 out of 5. Our weakness in this part is customer buying criteria, customer awareness, and customer accessibility. Especially the customer accessibility, we got very low, which is 1.5 out of 5. And next part will be learning and growth. In this part, our employee turnover rate got 7 out of 7, which is our strength, and the employee productivity we got 5 out of 7, which is okay for us already.
Our total score for round 2 is 72.8 out of 89. And thank you for the presentation. Are there any questions?